Hi guys, it's Stock Curry and welcome to the Stock Market Analysis Livestream. I like to do these every once in a while. We're going to go over your stocks and we're going to talk about how your stocks are doing. We're going to analyze them. We're going to do technical analysis and a bunch of different things. We'll go through the stock market, talk about which direction that's heading. But before we do, I just want to go over a few quick announcements. First of all, I am not a financial advisor, so anything I say today is not a recommendation to buy, sell, or hold any asset. These are just my opinions, which may or may not be accurate. So please do your own research before making any investment decisions based upon the information that you hear here today. And also, I just wanted to let you know that if you have anybody reach out to you and it looks like it's me and I'm asking you to send me money for copy trading or crypto trades or whatever, it's not me. It's a scammer. Please do not send any scammers money. Don't send me any money. The only time I'll ever ask you to send me any money is if you join a coaching program. But outside of that, don't ever send me money. And it's not me. It's a scammer. You'll lose everything. All right, let's go ahead and get into today's video. And what I want to do here is, since there really wasn't much market news today. So what we're going to do is we're just going to get straight into the comments. We're going to start talking about your stocks. And while I give you guys a few minutes to kind of think about what stocks you guys want me to analyze, let's start with some market analysis. So we're going to start with the SPY, which is an S&P 500 ETF. And on the SPY, I'm on the daily chart here, and I'm going to zoom in because I really want you guys to see this. So we talked in yesterday's video about how when the market reached this point, this was a downward trend line where we had reached the top of the market here, and then we had 1, 2, 3 touch points. And I said, look, this most likely is going to rebound to the downside. And sure enough, we are starting to get that rebound to the downside. Now, we don't have complete confirmation of this yet. The MACD is still positive, which is still bullish. The RSI is still above 50, which is still bullish. And even though we are below the 10-day EMA, we're still above every other EMA. So the market, despite today's drop, is still quite bullish until we get more bearishness. If the candle drops below the 21-day EMA, if the MACD turns red, if the RSI drops below 50, those will be indicators that we do have confirmation of bearishness, but we don't have that confirmation yet. Certainly today was a really good indicator that we are going to start the next leg down. Based upon the way the market's been trading all year, every time we have a leg down, we get a new 52-week low. You can see that here, 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 and here. So there's a good chance we'll get a new 52-week low. My guess is we're going to hit this level right here, which is right about 325. So on SPY, I can see it getting down to about 325. If you guys want to know what that is as far as a percentage, it's about an 18 to 19% drop from today's level. So we're talking 18 to 19% down over the next couple of months. Now, that's if this holds up and it continues. Yes, I know we normally get a Santa Claus rally, but unfortunately, just because we normally get something doesn't mean we always get something. And this may be one of those years where we don't get that Santa Claus rally. There are a lot of things that have historically happened to the stock market that have not happened. That this year is the first time in 60 years or 80 years or 100 years, the very first time where something that always happens didn't happen. So we can't really do a lot of historical analysis because of this issue that we're having. Okay, I also want to just pull up real fast and show you that here on the SPY, you notice it closed below 400. That is a psychological level that will be hard to get below. Same thing on SPX, right below 4,000. Again, a very psychological level. And if we take a look at the DIA, which is like a Dow Jones, it's very similar to the SPY in that the candle is below the 10-day, but not below any of the others. the RSI is above 50, but the Dow actually does have a MACD death cross. So this actually is a little bit more bearish than the S&P 500. And then another look at the NASDAQ, kind of in the same boat as the S&P. The difference here is while we are above 50 on the RSI and we're still green on the MACD, we're actually closed at or above the 10-day EMA. So we're below the 200 and 300-day EMAs. QQQ or the NASDAQ didn't quite have that run up that the Dow and the S&P did. So still a little bit more bearish, but still above the 10-day EMA. Zero confirmation of bearishness at all on QQQ. This is one that looks like, okay, had a little bit of pullback and we might go a little bit higher here. Now, when we get over to IWM, which is a Russell 2000 ETF, this is the closest thing we have to complete bearishness. So the Russell 2000 closed below the 10-day and 21-day EMAs. It is now only above the 50 and 100-day EMAs. It's below every other EMA. We also have the death cross in the MACD, and the RSI is right at 50. Another red day will put this into the negative. And if we get one more red day on the Russell, we will be 100% bearish. So a little bit of mix up in the markets right now. We don't have complete confirmation one way or another, but we are starting to turn bearish, which is kind of what my technical analysis that I did in yesterday's video showed. And if you want to go see everything I'm talking about, you can go watch yesterday's video. You'll see it all in there. So now let's go ahead and get over to your comments and let's see what you guys have. First of all, hello to everybody. Obviously, we just covered SPY. And what I do like to do, I do like to go through and talk about stocks that quite a few people are talking about. Let's go through XOM here for a second. This is oil company, kind of like ExxonMobil, and some really interesting stuff. So we see this start to rise up as, I mean, you can go all the way back to right here. So starting way back in January 1st, oil itself, including Exxon, has just been on an absolute rip, right? Okay, so coming down a little bit today, I'm not really sure why. I thought oil prices went up a little bit today. At least it did the last time I checked. Yeah, oil was up 1% today. So what do we got? We've got, what would have caused this to go down? ExxonMobil raised its CEO pay, so higher costs. We talked about how OPEC is going to keep cutting oil production. That should cause oil prices to go up. Was it just the increase in pay? Was that the only reason? I don't see anything else that would have affected this. Yeah, I mean, for this to drop 2.75% because they increased CEO pay, this is looking like it's getting to a buy the dip point. However, technically it's still bearish. So I would wait on ExxonMobil, but once this bearishness ends and we start getting some indications, technical indications of bullishness, I would be very happy buying the dip on this and riding it up. Let's see what else we got. Some other popular stocks here. Yeah, let's go ahead and talk about Apple here. I know a lot of people have been trading Apple, ticker AAPL. And the question is, has it bottomed yet? No, I don't think it has bottomed yet. If we do some technical analysis, we can see 3 touch points here. Certainly, if the bearishness that the market is starting to show rejects and we do continue going higher, then I could see Apple getting back up to about 165, 168, somewhere in there. But do I think it's bottomed yet? No. There's a lot of issues going on with China right now. And even though China is trying to reopen. Apple's trying to get their production facilities out of China and into India, as well as a few other countries like Vietnam. And that's all going to take time. Apple's going to be hurting for at least the next year. The other thing is, as we get into a bear market that we're in currently, and as earnings start to decline and stocks start to sell off, the PE ratios, also known as multiples, the price that somebody's willing to pay for a stock above and beyond the annual earnings, that starts to go down. And generally speaking, during major bear markets, we've seen the average PE ratio bottom out at around 7 to 8. And currently, Apple's PE ratio is 24. So Apple definitely has a lot more room to fall. Even if the market bottomed out at a fair PE ratio of 15, Apple still has another 40% to fall. So I know this sounds crazy, but just based upon the price to earnings ratio alone, I could see Apple bottoming out here at around $100. There are a couple of support levels here in this $100 range, as we can see right here. So I could see Apple falling as low as $100 if this bear market were to continue into 2023. I don't see the bottom yet on Apple. All right, let's see what else we've got. Some other popular stocks. We did DIA already. Oh yeah, please, everybody hit that like button, subscribe. Definitely helps out the channel a lot. I really, really appreciate it. The more people that like and subscribe while this live stream is going, the more people that can view it and the more people we can help. Okay, you're saying Gush oil stock was down as well. Let's see if we can, well, okay, Gush was probably down because this is a 3 times leveraged oil ETF, and Exxon was down. So let's see if we can see just what exactly Gush has. And so some of their holdings, let's go take a look. We've got cash, 35%. Treasury instruments, 12%. More treasuries, another 2%. So even though it's an energy ETF, literally 35 plus 12 plus 3, 50% of this energy ETF is the dollar and treasuries. Okay. So if we take a look at what happened to treasuries today, they were down. If we take a look at what happened to the dollar today, which would be DXY, it was also down. So half of this portfolio was down because it's treasuries and dollar. And then let's go look at maybe PBF and a few others, see what happened there. Wow, it's just in an absolute free fall right now. I don't know why these are falling so much, because oil has actually bottomed out and kind of started a rebound. Let's see what we got. Yeah, see, this top article right here says a trend reversal may be around the corner, meaning they think PBF is about to bottom out. Down 20% this month. That's amazing. Okay, so it looks like they bought another company. That could have cost them some money. Yeah, they're saying buy the dip. So I don't know exactly why these stocks are falling, but from what I can tell, just based upon some of the analysis, is it's probably good to buy the dip. But wait for it to technically bottom out. I think PBF is a lot closer than any of the others. The RSI is at 25, so it's oversold. And the other thing, if we look technically, notice how we had a touch point here on the 200-day EMA. We had another bottoming out touch point here at the 200-day EMA. and take a look. We are very, very close to the 200-day EMA, which is at $33, by the way. So anything below $34 might be good to start buying PBF and Gush. Not really sure why it's been falling like that, but at this point, I think it's oversold. And that's true for all energy stocks, Devin, all of them. All right, we got a few other really popular ones. TSLA, let's go ahead and do that. All right. So this stock remains 100% bearish. Yes, the MACD is up, but Tesla has refused to get above the 21-day EMA outside of like a very few short-term candles, and then just always just tops out and starts going back down. Just based upon the bearishness Tesla's been in since September 21st, I would say a put option might not be a bad idea. I could see Tesla hitting 155. So maybe a put option looking for about a $25 downside. It looks pretty solid here. Maybe a monthly December 16th put option. Looks like a solid play. The RSI, every time it gets to around 50, bounces and starts going back down. Very, very bearish. I kind of like a put option here for the next 2 weeks. Let's go to NEO. Haven't talked about NEO in a little while. Let's go ahead and do that one. Another popular stock amongst retail investors. Now, we know that all Chinese stocks have been falling and falling and falling here because of all the China lockdowns and everything. I mean, absolutely destroys the Chinese economy. Then, of course, we've seen NEO rise over the past few days as the protest occurred and China announced that they were going to kind of change course and not do lockdowns as much anymore. So all of that is a good sign for all Chinese stocks. I think if we look at JD, we'll see the same upward movement. If we look at, let's see, Alibaba, I think we had the same upward movement on that. So, I mean, they're all kind of going the same. Actually, NEO is lagging all of the other Chinese stocks. After the move that all the other Chinese stocks have done already, you see, I mean, this pretty big move up. That's what, almost 50%. JD going from 30, that's almost 100% move up on JD. I mean, that's a lot of buying pressure, a lot. And I don't know how much further this can continue before these start to take a breather. And the fact that NEO kind of missed out on a lot of that run up, it makes me worried. I know NEO did not have good earnings, and I don't know if they're going to do that well. I don't know if they still have the support of the Chinese government. I don't know what's going on with it. But if I were looking to invest in a Chinese stock, I don't think it'd be NEO. I think it would be like Alibaba, JD, one of the others. Because it's just really, I don't know. It's really hard to get behind a stock that missed out on the run up, because the question is, why did it run up? It has to have a reason why. Now, that said, just briefly, I was looking over some of the PE ratios. I can't do a PE ratio on NEO because they're not making money. They're not profitable. And maybe that is one of the reasons, because stocks that don't make money get killed in a bear market. But the current PE ratio on Alibaba is 131. Forward PE is 12. I think that forward earnings expectation is really high. The 131 PE is way too high. JD.com PE, 333. There is no way that these stocks maintain those PE ratios. These are going to come back down. They've been rallying a ton as the Chinese economy opens up, and I think they're ready to come back down. I would absolutely not be buying Chinese stocks right now. If anything, I'd be shorting them. All right, another question here. Do you think the Fed will wait? Who is they? No, who is they? Do you think they will wait until CPI and FOMC? I don't know who they is, but let me know and then we'll talk about it. SI silver, I haven't really been following this a lot, but I can tell you this: silver, gold, it's all going to drop so long as the dollar continues to go up. Actually, the dollar's been dropping quite a bit. This has a lot of the reason probably to do why gold mining stocks have been rising. But I don't know how much further this dollar is going to fall because the Fed is still raising interest rates. So I don't know why silver hasn't been keeping up. But check out SLV. No, SLV has been rising. So silver and gold have been rising, but SI got left behind. I don't know enough about this company to tell you what is going on here. I don't know anything about the company. All I can tell you is the technicals are 100% bearish. So sorry, I don't know anything else about that company. What else we got? All right, couple of questions on Lucid here. Let's go ahead and talk about that. LCID. Well, here is a stock that's 100% bearish. This is another company that's not profitable. And like I said, unprofitable companies get killed during bear markets because funding dries up. And it becomes very, very difficult for these companies to raise funds. It also becomes very, very difficult for them to issue shares because you're issuing shares at a really low price. If you try to go get a loan, you're paying a very high interest rate, and it becomes very difficult to survive. So we know they're losing a lot of money. Taking a look at the cash flow, they're losing over 500 million. So a little over $500 million a quarter. Let's take a look at what we got. We got total current assets, 4 billion, cash and investments is about 3 billion of that. Okay, we'll ignore inventory for a second. Let's just focus on the 3 billion. And then current liabilities, not bad, 800 million. So check this out. If we pull up a calculator here, okay, and then we take the 3 billion cash on hand, we subtract the 825 million in current liabilities, 2.5 billion. We divide that by a little over $500 million that they're burning through every quarter. That gives them just under 5 quarters. There's 1 quarter left in this year. That's 4 quarters. So by the end of next year, Lucid's bankrupt. Yeah, it should continue to fall. They're going to have a tough time surviving. I know 5 quarters might seem like a lot, but it's not. Lucid has to raise cash next year in the middle of a recession, in the middle of a bear market with interest rates skyrocketing. They're going to have a very difficult time surviving. Great car, incredible company, terrible financials, and most likely the stock price will continue to fall. See what else we got. All right, couple of requests for Sofi. Let's do it. All right, so when it comes to Sofi, Again, unprofitable company, they're going to get absolutely destroyed in a bear market. So let's go take a look at their financials. And obviously never turned a profit. Obviously, the whole student loan delays are not helping at all. Hopefully that gets over soon. Let's take a look at their, they lost $3 billion last quarter. Holy smokes. And then they turned around and raised $3 billion. Wow. Okay. Let's see. Let's see what we got. So, holy smokes. Look at their cash on hand. 900 million, even if you include this other 600 million, that's like 1.5 billion. It's got 11 billion in loans out. Oh my goodness. These is like student loans that have to be repaid to them, property they can't sell. So really 1.5 billion in liquid assets. Accounts payable 0, that's good. Payable accrued a little over 500 million. So think about 900 million. Take down another 100 million. That puts us about 800 million. Wow. $800 million left of cash on hand. And they burned, even in a good quarter, they're burning over $1 billion. SoFi is bankrupt. They're literally bankrupt. God, what a great company. But honestly, I don't know if they're going to survive. This is really concerning to me. I wish I had looked at this earlier. I've got a couple $1,000s sitting at SoFi right now, but the one nice thing about a company like SoFi going bankrupt is that it's FDIC insured on your cash and SPIC insured for your stocks. So if you have crypto with SoFi, you're screwed. But if you've got stocks and cash, you're backed by the federal government. So even if SoFi does go bankrupt, you're not going to lose your cash. But I don't know if they're going to be able to, I mean, they'd have to raise money every single quarter. I don't know if they're going to be able to do it. I'm actually, after looking at this, I think I might pull my money out of SoFi because I don't want to have to wait for bankruptcy and everything else to get my money out. Just because it's insured doesn't mean you're going to get it right away. Yeah, I am. I'm actually going to make a note right now. I'm pulling my money out of SoFi because I don't want to deal with a bankruptcy. Stock-wise, short it, probably going to 0 unless they get bought out. Not looking good at all for SoFi. That's got to be the worst quarterly report I've ever seen from them. This company is bankrupt. God, I hate that. I love SoFi. I hate the fact they're bankrupt. All right. Let's move on. See if we can get some. Well, this is not going to give us any more excitement because this stock is hurting. Okay. ZIM. Let's talk about this. So one thing about ZIM that you'll notice that's very consistent is you always get a little bit of a run up going into a dividend and then a major sell off and then a little bit of a run up going into a dividend and then a major sell off and then a little bit of a run up going into a dividend and then a major sell off. There's a couple of things hurting ZIM right now. One, shipping costs have gone way down. And keep in mind, the market is forward looking. So the market is looking at a company like ZIM or any of the other shipping companies for that matter. And they're saying their shipping rates are going down. The profits of these companies are probably going to go down. And as a result, their forward earnings don't look very good. Now, that said, shipping companies are best valued off of their book value. That is the value of their assets. Because even if the company were to go bankrupt, let's say worst case scenario, right? They could sell off those assets. And assuming they get anywhere close to $1, like what the assets are worth, the PB ratio or price to book ratio should be $1. Anytime the PB or price to book ratio is trading under $1, you're getting this company for a severe discount. Now, the PB ratio of ZIM is 0.4. So by buying ZIM today, you are buying this at a 60% discount to the value of the ships. And the PE ratio is 0.39, forward PE ratio 0.51. This shows that you're buying this company at an extremely steep discount buying it today. Now, let's just go take a look at the financials and make sure we have a good, solid company, because you don't want to buy into a company that's losing money. Webull sometimes does this. Hopefully that pops up. There we go. Okay. So if we take a look at their profits, we can see $14, $14, $11, $9. Just what we'd expect, right? The profits are declining because shipping rates are going down. But the fact is, this is a very profitable company. They're probably going to see profits continue to decline a little bit, but man, they're still extremely profitable. Let's go make sure they got enough cash on hand. Their cash flow, positive $1.6 billion. Look at their cash flow, positive $2 billion, 1.6, 1.7, 1.6. This is a very cash flow positive company. They have no problem raising cash and making money. Total current assets, $4.5 billion. Total current liabilities, $2.8 billion. They've got $1.5 billion in additional cash on hand that they don't need. This is a gem of a company. We can probably expect the share price to continue to go down as shipping rates continue to drop. But from a value perspective and a dividend perspective, it's a wonderful, wonderful company to own. Now, from a technical perspective, it sucks. This is a falling knife. It has been selling off. It continues to sell off. It's showing zero signs of rebounding. If you wanted to wait to buy more, I wouldn't blame you, because it is an absolute falling knife technically, but it is also very undervalued. All right, let's see what else we can get here. You're saying USO, which is United States oil, is down 3% today. True. But if we take a look at oil itself, it was up. So the oil futures were up. Oil futures, U.S. oil futures up 1%. Brent crude oil futures up 1%. And the ETF down 3%. So just because your ETF went down doesn't mean oil futures are going down. They're not a one-for-one trade. Let's go take a look at USO. And I want to see what we're looking at for the NAV currently. All right. And I'm going to blow this up so we can see it. And what we're looking at is on the right here, this part over here. So the NAV is currently at $67.37. And the last trade price, $67.72. So what basically the reason this dropped today is because the NAV was it was above the NAV. So whenever the ETF trades higher than the value of the underlying assets, the ETF will drop down to the value of the underlying assets. This appears to be a NAV correction and not a oil price dropping correction that happened today. All right, let's see what else we got. Going through these, taking a look. I try to find ones that more than when people ask about. Okay. General question here. How do I feel about a Christmas rally? Christmas rally. At this point, it's not looking too good. Black Friday sales were down. Overall, things were just down. Yeah, not looking that great for a Christmas rally, unfortunately. And like I said earlier in the video, just because something almost always happens does not mean it always happens. This may be one of those years we do not get a rally. Okay, a couple of questions here on Crowdstrike. Let's go take a look. CRWD. And your question is a very high PE. So this can be very, very confusing. So the forward PE might be high, but the current PE is negative. And anytime you see a negative PE, it's because the stock is not profitable. And Crowdstrike is not profitable. So because they're not profitable, they do not have a PE ratio. So no, they don't have a very high PE. The PE is nothing. You can't divide price divided by earnings if there are no earnings. It doesn't work. And so it's an invalid number. And so we can't actually do that because there are no earnings. So is falling because of future outlook? Yeah, we have a company that's not profitable. And in the future, they're going to be even less profitable. And like I've said already, companies that aren't profitable get destroyed in bear markets because they have a very difficult time raising funds. So given that, let's go take a look at their financials and see if they're risking bankruptcy. Okay. So cash flow positive. That's interesting. Let's go take a look at the balance sheet. $3 billion in current assets. It looks like it's real, so we'll go 3.2 billion. Liabilities 1.8. But really nothing to worry about because they're cash flow positive for now. Yeah, Crowdstrike isn't going anywhere. They're going to be around for decades. But I wouldn't buy it until we start getting signs that the bear market's over, because they're going to continue to get crushed just by the pure fact that we're in a bear market. But once risk starts coming back into the stock market and we get back on what's called risk on, then I think Crowdstrike should start to take off again because they got tons of cash. They're not going anywhere. Let's see what else we got here, guys. Yeah, let's go talk about Google. We haven't talked about that in a while. GOOG. All right, technically, I can tell you this is pretty bullish. Not completely bullish, because we're still below the 100, 200, and 300 day. Well, yeah, we're still below the 100, 200, and 300 day EMAs, but we're above the 10, 21, and 50, so it's pretty bullish. MACD's bullish, RSI above 50, that's bullish. Google's actually looking really bullish. So let's go look at PE ratio of 20. A little bit high. Still a little bit high, but not terrible. You know, if the bear market continues in 2023, we could see Google drop about another 25%, down around 75 bucks or so, right in this range. And I think we had some support there as well. Let's do 75. Oh yeah, we have very strong support. Very strong support at 75. So I could see Google hitting the $75 point. as sort of a bottom in 2023. P is decent, but like I said, it is still just a tad bit high given the fact that we're in a bear market and about to enter a recession. But not nearly as bad as some of these I've looked at. Let's see what else we got. Oh, yeah, good point. So you're saying, okay, Lucid is Saudi backed, so Lucid will get plenty of cash. True, but remember, whenever the Saudis invest in a company, they're going to take a lot of stock. So let's just say, for example, that Lucid did get billions and billions and billions of dollars from the Saudis. Well, the shares are just going to get diluted, and the value of that share is going to go down and down and down and down and down. So just because it's backed by the Saudis doesn't mean it's a good investment. Here we go. So an update on the question. Do you think we will stay in this range of 4,000 on SPX? So do I think we'll stay in this range of 4,000 until after the FOMC and CPI announcement? Okay, first of all, for those of you guys who don't know, the CPI comes out on December 13th, and the Fed meeting is December 13th and the 14th. It's about 2 weeks from today, and that's when the Fed's going to raise interest rates again. So the question is, do I think we'll stay in the range? No. Usually going into a Fed meeting, we will generally have a pretty big sell-off going into a Fed meeting. So I actually think the market's going to sell off for the next 2 weeks. Now, after the Fed meeting, we could rally again, but I do think that at least for the next 2 weeks, the market's probably going to sell off. I don't think we're going to stay in this range. I think we had a pretty clear bounce. This is kind of a doji candle. It's very often the signs of a reversal. Not always accurate, but very often when it's above these green candles, it is a reversal sign. This is actually the only real doji candle I saw. So yeah, this is technically it's just screaming a drop. So I don't think we're going to stay in this range. We'll just talk about these briefly, just kind of in general. Look, crypto stocks are going to trade based upon the value of crypto, especially Bitcoin and Ethereum, depending upon what the company's mining. But here's the problem, though. Currently, the cost to mine Bitcoin is higher than the value of Bitcoin. Anytime Bitcoin drops below about 16.5, the cost to mine it is higher than the value of it. So a mining company is really in deep doo-doo when they're literally losing money from their main operation. It's not good. This is not the time that I would want to be buying mining companies. I would not want to think about buying mining companies until the price of Bitcoin got above 17,000 and stayed above 17,000. And right now it's just not. Sam, bankrupt, fraud, screwed everybody over. And okay, we're above 17,000 now, but we haven't been for much of the last month. So I would wait for some consistency here above 17,000 before I would started buying into mining companies. Part of the problem is that the next support level is all the way down at 12.5. And we're not, normally when we hit a support level, we stick. So you notice how we kind of hit the support level and we bounced around it for a while, and we kind of skipped this one, but then we hit this one and kind of bounced in between these two support levels and stayed there for a while. This is not a support level. So I have a bad feeling that what's going to end up happening here is that, and you can see this 12.5 is a really strong support level. You can see this here going back to 2020. So where we're at right now, this is not a support level. And I think we're probably going to drop down to 12.5. That's my guess. Now, if Bitcoin does drop down to 12.5, that's what I plan to start buying, because I personally think 12.5 is the bottom for Bitcoin. Okay. Hey, don't worry about being late, my friend. You can always start it over once we're done. Let's see what else we got. Looking for a few others. All right, a few questions about AMD. Let's go ahead and look at that. Well, as you can see, we are on the virtual edge of death. So technically, it's still mostly bearish, but one more or two more red days, and this is going to turn completely, technically it's mostly bullish, but one or two more red days, this is going to turn completely bearish. I don't know. I would watch this. It's almost time for a short on this. PE ratio's at 44. No, that's way too high. No, this has got to come down. This has got to come down. I almost guarantee you we're going to get back down to this $55 level again. This looks like a great candidate for some put options. Let's see what else we got. Right now I'm using Webull. Webull's where I do a lot of my options trading. I think Webull right now is offering up to 12 free stocks. So, yeah, they're offering up to $12,600 in free stocks. So if you want to join Webull and deposit $100 or whatever and potentially get up to $12,600 in free stocks, go for it. It's a great time. I know Moomoo, they just bumped up their promotion. So if you don't have Moomoo also, they are now offering up to 20 free stocks. And here's the cool thing is for the past couple of months, if you deposited $100, you only got 5 free stocks. Well, guess what? As of today, if you deposit $100 in a Moomoo, you get 10 free stocks. Each valued up to $2,000. You get up to $20,000 in free stocks from the Moomoo. You only have to deposit $100. Now, if you choose to deposit $1,000, then you get up to 20 free stocks, and you also get an entrance into their $60,000 giveaway. So, I mean, with the Moomoo, if you deposited $1,000, you could potentially get up to $60,000 in cash. And all you have to do is deposit $1,000. Now, if you only have $100, that's fine. You can just deposit $100 and you'll still get 10 free stocks with Moomoo. This is the best promotion they have ever run. It's even better than their 10-year anniversary promotion, which I don't even know how that works. But they really listened to us influencers. We complained that their promotion sucked. So they changed it. And now it's awesome again. So yeah, Moomoo, 10 free stocks guaranteed. And then up to, like I said, up to $20,000 there. And then with Webull, you get anywhere from 6 to 12 stocks, kind of a lottery system, but up to $12,000 in free stocks with Webull. And again, you just got to deposit $100 in each one. Moomoo is stockcurry.vip/Moomoo, and Webull is stockcurry.vip/Webull. All right, moving on. That is what platform I am using. All right, only one request on this, but we'll go ahead and talk about it because I know a lot of people invest in it. PLTR. Well, that looks like a falling knife. But even though it's a falling knife, it's having trouble going much lower. Obviously, still not profitable. Just like any other company, if it's not profitable, it'll get destroyed during a bear market. Cash on hand, almost $3 billion. Liabilities, $680 million. Tons of cash. They are cash flow positive, even though net income's down. So, kind of like Crowdstrike, they're not going anywhere. They're going to be around a long time. But the stock price will get destroyed so long as they're not profitable. By the way, guys, if these live streams are helpful for you, please make sure you hit the like button and subscribe. And, just share the live stream on Twitter and with your friends and everything. Just let them know what we got going on here. If you guys find this helpful, if you don't find it helpful, let me know in the comments. What I want to do, we're running low on time. I just want to review some of the other comments and see what we got here. Why isn't anyone saying diamond hands anymore? I don't know. That was never a phrase I really used. When your stock is up, take profits. And if you made a mistake and it's going down, sell. But I get a bad feeling like there was just a lot of pumping ups and crap on YouTube last year. And people would, buy stuff and then be like, oh, diamond hand, while they went out and secretly sold. I mean, I don't have proof of that. I feel like that may be some of what happens. Anyway, let's see. See what else we got. All right. Yeah, I know some of you guys invested in Volta. I think this was like a Larry Jones stock, VLTA. This is a company, again, not profitable. It's now a penny stock. If we look at their financials, they're losing $45 million a quarter. If we look at their balance sheet, they got less than that on hand. This company's bankrupt. Volta's completely bankrupt. Yeah, they'll be very, very lucky to survive another year. They're bankrupt. Most likely the stock is going to zero. All right, let's just talk about a few other big hitters real fast. Amazon, AMZN. By the way, if you guys don't know, we have a long-term short on Amazon. I've got a June put option on Amazon called a Leaps. And that's just because not only is the company extremely bearish, technically, but fundamentally, their PE ratio is still at 84. 84. And if an average PE is 15, you're not going to like this. You're going to think I'm lying. But no, I'm literally telling you guys the truth. Let's do this. 84, 15, 69, 69, 84. Okay. Amazon, it could drop another 82% before it got back down to fair value. And if you think future earnings are going to help you out, no. Forward PE is negative 1,000. Analysts actually expect Amazon to lose money. They have been losing money. They had 2 quarters here, negative 38, negative 20. This, I mean, we talk a lot about these stocks that are one-time darlings of the stock market that just fall out of favor. That's Amazon. Watch this. Take the, 15 is the PE, fair PE, currently at 84. Take the current share price. You're not going to believe me. Go ahead and throw all your hates in the comment now. Call me crazy. I'm telling you, from a fundamental standpoint, Amazon should be trading at $16 a share. 16. Of course, it's not going to get there overnight. It'll take years to get down there, but that's the fair price of Amazon right now. $16 a share. I know. You don't believe me. That's fine. You've been spoiled by a 10-year bull market, but we are getting back to reality, and share prices are going down. Let's go take a look at Disney real fast. DIS. DIS has been falling. You know the old saying, go woke, go broke. That has been happening with DIS. And current PE, 54, way too high. Yep. So if we did share price on DIS, we're looking at about $26 a share. $26 a share. Fair price on DIS. I know. You don't believe me. Throw your hate in the comments now. I don't care. I'm just giving you guys the facts. Let's move on. Switch 401k to bonds. I'm not a financial advisor. Go talk to your financial advisor about that. All I can say is I have seen financial advisors on YouTube suggest that now might be a good time to get back into bonds. I know a lot of people were not doing bonds for many, many years because the interest rates were just way too low. But now that interest rates are rising, bonds are definitely looking like a better investment. But again, go talk to your financial advisor, which I am not. See what else we got. We're running to the end. I like to keep these under an hour. We're at 56 minutes. So I'm just looking for one or two more to talk about that maybe be a little bit different that more than one person's asking about. Still looking here. Well, you guys are all over the place, and I know we covered a lot of these already. I'm trying to go through these quickly. It looks like I'm pretty far behind. My goodness. All right, I'm just going to pick one more, guys. Actually, I'll do two more. I'll do two more real fast, and then we're done, okay? Don't put anything else in the comments. I'm not going to respond. We got two more, and then we're done. The last two we will do are going to be, if I can find it, Meta. Did I say it right? Did I say it right? Meta? I think I actually got it right this time. Woo! You guys are teaching me here. I'm learning from y'all. Okay. Meta. Let's take a look at here. PE is 11. Forward PE 13. I can't believe it, but Meta is actually undervalued. Technicals are 100% bullish. Well, except for the fact that normally we get here and then it keeps going down. Man, I mean, from a value perspective, I'd say buy. From a technical perspective, I'd say wait. I absolutely would not sell it. I would not short it. I wouldn't buy a call option either. I have value-wise, dollar cost average in. It's undervalued. This is a buy. Absolutely a buy. All right, last one we're going to do is going to be Vale. I don't know how to pronounce it. I don't speak Spanish, Brazil, or whatever they speak down there. But anyway, VALE. Yeah, it's been a great performer for us. We've been buying pretty much at this level back in here. I mean, we're up like 20, 30% on this stock. This is one of those companies that's always done well for me. This is one of my favorite stocks to invest in. Mining company, for those you guys don't know, mining company out of Brazil. But, woo-wee, look at this. Current PE ratio, 3.8. Talk about a value stock. Dividend yield, 8.9%. I don't care if you're a value investor or a dividend investor. This is the stock to load up on. This is not a dollar cost average into stock. This is a load up stock. I mean, man, dividend portfolios, value in portfolios. What a great stock to buy. Again, not financial advice. Do your own research, but I would load up on it. Let's take a look here. Cash flow positive, $16-17 billion cash. Sitting on real current assets about 28 billion plus another 11 billion receivables. 16 billion total. Inventory doesn't count. Oh man, like 40-50 billion dollars in current liabilities, 70 billion. So more assets than liabilities. What is this made up of? Accounts payable. Okay, fine on that. I don't know what other current liabilities is, but I mean overall, just they got more cash on hand than they got more liabilities than more assets than liabilities, positive cash flow, profitable company, huge dividend, undervalued. Everything about this stock is great. All right, we'll end it there. We'll end it on a high note. My load up stock. All right, guys, I thank you all for joining. And please, again, hit that like button and subscribe. And I hope to see you guys next time. I will be putting out a regular video tomorrow. And a little bit later this year, in about maybe 2 weeks or so, we're going to be doing a live stream. We always do this every year. It's an end of year live stream. We're not talking about stocks. We'll talk about the channel, the YouTube channel, and the Discord and a few other things. And we'll just get your opinions. I just want to get your advice. What do you think's working well? What do you think's not working well? And then, of course, we have a lot of fun. We do giveaways. I've got a Blink doorbell camera to give away. I've got t-shirts to give away. I think I got some hats to give away. Just a lot of fun giveaways. We're going to give away a ton of prizes. The last thing I would say before you go is make sure you sign up for those giveaways. And you can sign up for giveaways at stockcurry.vip. And at the very, very bottom of this website is a purple button that says sign up for giveaways. Go to stockcurry.vip, click the purple button at the bottom of the website, and that will allow you to sign up for those giveaways, okay? Stockcurry.vip, click the purple button at the bottom. I hope you win, and I hope you guys have a lot of success trading.